Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, both Bitcoin and Ethereum are playing out short-term bullish divergences just after we saw an initial dump immediately after the new CPI inflation numbers came out higher than expected, which I'll talk more about in just a moment, so definitely stick around. First of all, starting off with the new CPI inflation numbers that were released just a few hours ago, and basically the expectations for this new CPI inflation number were sitting at around 6.2% to 6.3%. If you're looking at consensus, the expectation was 6.2%, but if you're looking at the trading economics forecast, the expectation was 6.3%. And as you would already know, if you follow me over on Twitter, the new CPI inflation number came in at 6.4% year over year, which is slightly higher than the expectations. And so, as I said in my last video on this channel, if inflation comes in higher than expected, technically that should be considered bearish for markets. But obviously, as I also explained in my last video, the closer to expectations, the less volatility we should really be expecting. So basically, if we see only a slight miss to the upside, we shouldn't be expecting a lot of bearish price action, maybe a slight amount of bearish price action. Whereas if we saw a massive miss to the upside, for example, if inflation came in at around 7%, then in that case, we would see a massive bearish move across markets. So once again, as I explained in my last video, the bigger the miss from expectations, the further away from expectations, the more volatility in that direction that we're likely going to go. And so considering the fact that we only saw a very slight miss to the upside in these CPI inflation numbers, that resulted in a small amount of bearish price action that lasted over the next 1 hour approximately, before eventually that sell pressure started to get absorbed by the market. And then obviously we eventually saw a short-term recovery around an hour or two later. And so once again, as soon as these inflation numbers came in, because they came in slightly higher than expected, we initially saw a dump in the market and some bearish price action over the next 1 hour or so. And in fact, here in the imminent short term, while the price was playing out this bearish movement, we did actually see a very small falling wedge pattern form in around a 1 hour time period, and then obviously break out to the upside, considering this is a bullish pattern. But anyway, this new CPI inflation number has now already been punched into the chart. It has already had its initial effect on the market, with the market pricing it in immediately as it got released, considering it was slightly higher than expected. Once again, that resulted in bearish price action, pricing in that slightly higher than expected number. And in fact, if you're looking at the futures market, what the futures market has actually priced in based on these futures market contracts, we can see that right now the market is expecting that the federal funds rate will continue to actually rise up towards potentially 5.5% towards the middle of this year. And now, if you've been watching my videos for the last few weeks, then you would probably know that the market was expecting for the Fed funds rate to stop at around 5% approximately, which is at the next Fed meeting. We're most likely going to see another 25 basis point hike at the next Fed meeting, which is in March. And basically, just a few weeks ago, the market was expecting for that to potentially be the final rate hike. Once again, another 25 basis point hike in the March Fed meeting. But after the latest CPI inflation numbers came in slightly higher than expected, that has indeed changed these market probabilities, and the futures market has now priced in for interest rate to go another 50 basis points up towards 5.5%. So simply based on what the futures market is pricing in right now, based on the most likely probabilities, we're still most likely going to see that 25 basis point hike in the March Fed meeting. But now we're most likely going to see another 25 basis point hike in the May Fed meeting. And it doesn't necessarily stop there, because based on the highest probabilities, we're most likely going to see another 25 basis point hike in the June Fed meeting. So basically 3 more 25 basis point hikes from now. And then once again, again, simply based on the highest probabilities right now, we're most likely going to see a pause in the Fed funds rate, so a pause in interest rates after the June Fed meeting, and we could still potentially see rate cuts towards the end of this year and entering into early 2024. So essentially, interest rates going back to the downside around the end of this year or early next year. But once again, that is simply based on the information that is available today. So for example, future inflation numbers could indeed change these probabilities like they have recently. And once again, these probabilities actually show what the market is already pricing in. So these future rate hikes right here showing another 325 basis point hikes to come, they have essentially already been priced in to the markets. But anyway, now getting into the Bitcoin part of this video, this right here is the daily Bitcoin to US dollar chart. And right now, the price of Bitcoin is still holding above this golden pocket support area, which is starting at around 21.3K here on the daily time frame, acting as support. And for resistance, we still have this level, which should be acting as resistance at around 22.7K. And other than that, not much else has changed here on the daily time frame. So getting straight into the 8-hour Bitcoin to US dollar chart, and as we can see here, the price of Bitcoin is currently experiencing a bounce from this important level of support that I've been talking about for a while now on this channel. But in case you're new to this channel, this level of support that I have here is sitting at around 21.5K, initially based on an area here in the volume profile indicator. And since then, this area in the volume profile indicator has actually expanded up towards around 21.8K, which should also be acting as some support as well. And even if the Bitcoin price breaks below these levels of support, we have even more support here in the volume profile indicator sitting at around 21,000. And as I also mentioned in my last video on this channel, we do actually have a bullish divergence here on the 8-hour time frame. And since my last video, this has now been confirmed on the 8-hour chart and is even more visible here on the 6-hour time frame, as you can see, because we clearly have lower lows in the candle closes in the price action, but we also have higher lows in the RSI, which once again is a bullish divergence. And as always, a bullish divergence means that we're due to see reduced bearish momentum, at least in the shorter term here. And so potentially over the coming days, I wouldn't really be expecting a significant amount of bearish momentum. And instead, we're most likely going to see either choppy sideways price action or a slight bullish relief potentially in the coming days. But anyway, now getting into the Ethereum part of this video, this right here is the daily ETH to US dollar chart. And right now, as of recording this video, the price of ETH is experiencing an important bounce from this important level of support at around 1.5K. Obviously, as you can see here, the price of ETH did not actually end up seeing a daily candle close below 1.5K and instead simply formed a wick to the downside, a candle wick. And so this, of course, means that we do not have a confirmed break below this level of support, at least not yet, which obviously means 1.5K is still acting as support for the price of ETH here on the daily time frame. And now, as I've also explained in recent videos here on the channel, if the price of ETH confirms a break below 1.5K, then it's possible we could repeat history like what we saw back in November, but instead of a drop all the way down to these prices, we could potentially see a drop down to this massive area of support in the volume profile indicator, which is sitting in around the mid 1.3K price range, around 1350 to 1360 approximately is where it's starting. And so once again, a drop down to those levels could become likely if we first see a confirmed break below 1.5K, which once again, as of right now, has not yet happened because we haven't yet seen that daily candle close below 1.5K. And now, if you're zooming into the slightly shorter term, looking at the 4-hour ETH to US dollar chart, as you can see here, we do actually have a confirmed bullish divergence in the shorter term, like Bitcoin in the shorter term, which once again means that we're due to see reduced bearish momentum potentially over the next 1 to 2 days or so, considering this is on the 4-hour time frame. So once again, I would mostly be expecting either choppy sideways price action recession or a slight bullish relief potentially in the coming days here in the shorter term for the price of ETH. And now, if you want to know how to make a lot of money in crypto, no matter if the price is going to the upside, to the downside, or simply chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is going either up or down, and the video in the bottom left shows you how to profit in crypto if the price is just chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.